So that day we were discussing about accrual concept, correct? So I just gave you the example of income received in advance or unearned revenue. So I told you that in the income statement, if you have interest earned, so when will you recognize the income? You will recognize the income when you earn it rather than receive it, correct? Hello?
Yes, sir.
Hello? Yeah, so interest you recognize the income when you earn it rather than received. So interest received is how much? Interest received is like, let's say we have got 1,20,000 for the entire year. Okay. This is interest. Yeah, received. Yeah. So now this is the total year's interest. Am I right? Correct. So let's say for you are at the end of the year. Okay. And like this is what the amount you're supposed to earn actually. This is the amount you're supposed to earn completely. So let's say the tenant is about to leave the house and the tenant wants to go. So what will happen? You have to return the amount back or you'll keep the amount back. If the tenant wants to leave the house in between, like let's say they gave the they gave the rent for 12 months. So this is what you received. But if I ask you a question, how much did you earn? If they leave the house, that means 6 months rent you have earned. Am I right? Yes or no? Hello.
Yes, sir.
So less interest received in advance. Okay. Let's say they have paid, or let's say they have paid for the next 6 months. Let's say this is the sixth month. They paid for the next 6 months, let's say. Okay, they paid for the next 6 months in advance. Okay. So the entire year's, okay, let's say it is interest earned. That means you are expecting the interest to be earned for the entire year. So the interest earned according to you is 1,20,000. Okay, this is for the entire year you have to earn, correct? In this 6 months interest, like after 6 months, let's say 6 months have passed. So I'm asking you the status of 6 months, how much is your interest received or what is your interest income? So if 6 months have passed, your interest income is how much? 60,000, correct or wrong? Please tell me yes or no. Hello.
Yes, sir.
If 6 months have passed, your interest income is 60,000, correct?
Yes, sir.
So this is 1,20,000 interest earned. Interest received in advance for next 6 months is how much? 60, correct? Out of this 120, this is like total interest of the year, which you will earn. Okay, in this six months interest you received in advance. So in this 6 months, how much interest have you received? 60, correct? Yes. 120 is interest earned. Out of 120, how much you got in advance? 60. So how much did you receive ultimately? That means how much did you like received or earned is nothing but 60,000, na? Yes or no?
Sir.
That's what. So if I in the liabilities, it is very simple that every month I will recognize the if I give the service, my liability would be lessened every year. Actually, like if you understand the treatment, it's very simple. If I get a rent of 1,20,000 from my tenant in advance, this is my liability. I will write in the liability side of balance sheet. And when the first month like has passed by, my obligation will reduce by 10,000. And now my obligation is of 1,10,000. and this 10,000 goes into the income statement as 10,000 interest received. You can write in this way. Don't go with all this treatment. Simply, if you can understand this way, you can understand, because now this way is not followed actually. T-shape accounts are not followed anywhere now. Now, if you study BCom also in your college or somewhere else, you will not study T-shape accounts. So in the income statement, 10,000 comes. Now again 10,000 for the next month. Your outstanding liability is 100,000. In income statement, 10,000 again adds up. So now at the end of the year, your rent is 1,20,000. Correct? You received and liability is zero. You can think in that way. But if you are making T-shape accounts, then interest earned is 120. Like for the entire year, let's say 6 months have passed by. So 6 months you have earned an interest of 60. Okay. You have received and earned both the things like 60,000, like less income received in advance. So we'll deduct 60,000. That means 1,20,000 is to be supposed to be earned for the entire year. And out of that, now 6 months have passed by. So since 6 months have passed by, we have just earned and received 60,000. Okay. That means this is what is received in advance. But if we have to show in the income statement, what is your interest received and earned? 60,000. Correct. This is your income. This is a liability. That's the reason why you have removed it from the entire interest amount. Okay. This after the entire year, this becomes zero, and then you 60 you add up to your entire interest received. Okay. So then your interest received or earned would be 1,20,000. That's what. Now, next point, we have gone through the accrual concept. We have done the real world example. Okay, now let's go for the qualitative characteristics of financial information. See, first of all, you as the user of financial statements, okay, if you are stakeholder of a company, you become the user of financial, you become the user of financial information, or you become someone who definitely looks forward for the financial information of the company. What do you mean by financial information? Definitely with financial information, we mean, see, we have put our money into in a company as an investment. Since we have put our money in a company as an investment, we want returns from that company. So whatever the information related to revenue, information related to expenditure, information related to increase in the asset value, information related to liability, information related to profits, information related to dividends, all are nothing but a part of financial information. So what qualities a financial information should have? That is what is the question. So let's discuss that. The conceptual framework states that qualitative characteristics are the attributes, okay, that make the information provided in the financial statements useful to users. Attributes is nothing but qualities. See, the financial information what you should get should have certain qualities, or certain so it should have certain elements which definitely creates, it's like which definitely creates a curiosity in you to know about. That means if it doesn't have some elements which you require or desire, then that becomes useless information for you. For example, being an investor, you want to know the profits of a company. If that information is lacking that profit element, will you take any interest in knowing about the information? Never. So there are certain attributes or qualities a financial information should have, okay, and those would be very useful for the users. Actually, those should be useful for the users. Now, the two fundamental qualitative characteristics are, so what a financial information should be like? It should be very much relevant to you, and it should be faithful representation. What do you mean by relevant and faithful representation? Suppose this is Mr. A. He wants to go to Tokyo, and you give him information related to London. Do you think it is relevant for him? Please tell me yes or no. Do you think Mr. A, who wants to go to Tokyo, is getting information related to London, is it relevant for him?
No.
Does it does the information related to London is going to like give him any kind of any, is it of any usage to him? Is it of any usage to him, or is it going to give him certain extra knowledge about Tokyo? Nothing like that. He doesn't want to go to London. He doesn't want to know anything about London. He wants to go to Tokyo. He wants to get more knowledge about Tokyo. And if that he gets, he can, that becomes easy. His trip or travel to Tokyo becomes easy. Correct. So that is relevant for him. So in the same way, relevance here in this context means capable of making a difference to decisions made by users. See, if you get some information which is very useful for you, then based upon that information, you can take some crucial decisions. Correct. So that particular information which you are getting, based upon which you can take some crucial decision, is nothing but what is relevant information for you, because based upon that you can take some crucial decisions, and we will discuss some examples related to that right now. Next, predictive value, confirmatory value, or both. That means something which is relevant to you. Okay, when it is relevant to you, when you can predict something about it, or when you can
Excuse me, sir,
confirm in
I
the
cannot
future.
hear you.
Can't you hear me? Hello? Can everyone hear me? Hello? Hello?
Yes, sir.
Yeah, can you hear me now, Hamsika? Hamsika, can you hear me?
Yes, sir, now I can hear you.
Okay, okay. So see, the information what you're going to get in the future, you should be in a position to predict that. Okay, then that becomes relevant for you. And secondly, in the future, what you are thinking, okay, that should like your thoughts, whatever you have related to a company or something, or about your investment. If you get a confirmation or the results what you get definitely conforms with your thoughts, okay, which are on the positive side, then definitely that information is relevant for you. Next point, faithful presentation. See, any financial information which is given to you should be complete. That means if I give you a financial statement, okay, by skipping some important entries, do you think that that financial statement would give you the correct picture of company's assets and liabilities? No. Suppose if company owns some land or building and I don't write that, or I don't record them in the books, then that is a incomplete information. Correct. Secondly, the presentation of the financial statement should be very much neutral. It should not be something of some kind whereby it should be made to attract attract some stakeholders. For example, for example, let's say there shouldn't be any kind of overstatement or understatement of expenses or incomes. That means the statement should be very much neutral. It should not be biased. What do you mean by biased? It should not be made in such a way that it is made to attract certain stakeholders. Suppose if we want to attract investors, okay, if we want to attract investors to buy our company stock in the future, then we will try to show the expenses, like we will try to lessen our expenses in the statements. That means we want to show the expenses, we want to show less number of expenses in the financial statements or the income statement. That means what am I doing? For example, now you're not getting this point, but if I show you some example, you'll get it. See, there is a concept called expensing and capitalizing. There's a concept called expensing and capitalizing. So what do you mean by expensing and capitalizing? Suppose this is a property, plant and equipment. This is a asset. Okay. There are certain expenses related to property, plant and equipment like installation, installation of machinery, freight charges related to machinery. What do you mean by freight charges? The charges which you incur for bringing the property, plant and equipment from the vendor's site to your factory site. Okay. So for that you will be spending some transportation charges. Now you'll be asking me a question, sir, transportation charges are what kind of expenses? See, if on daily or routine basis, you have some inventory in your business and you deliver those inventory to your customers. So you incur some expenses on routine basis. Any expenditure which is of routine basis or which is of recurring nature should be shown in the statement of profit or loss. But any expenditure which you spend only once in a year, only one time, and that is not of recurring nature, that is only spent once in a year. For example, if you bring a machinery, you bring machinery only once, am I right? That is when you start the company or when you start your business, you bring the machinery, you install it, you do the installation only for once. I know repair and maintenance happens many a times in a, like annual maintenance happens every year, but installation happens once and you spend the freight charges only once when you bring that asset. Am I right? Hello?
Yes, sir.
Yeah. So now these freight charges for bringing the machinery is spent only for once. Okay. And any kind of duties, import duty, custom duty or anything. Okay. And then you ask some technician to come, some engineer to come and do the installation of this plant. So you pay some fees for that, fees for technical assistance. All this is you are spending only once. These are not of recurring nature. Okay. So you should add all these expenses to the asset. That is called capitalizing. Okay, that is the right treatment to do. But what sometimes the accountants do is they take these freight charges and they show under the income statement, that is they expense it. So why are they doing this? Did you anytime like ask a question to yourself? What is the motive of the accountant to show this freight charges in P&L? That is statement of profit or loss rather than in the statement of financial position or balance sheet. What is the reason for that? The reason is nothing but the accountant wants to save taxes. He wants to save cash, okay, by paying less taxes. Now you'll be asking me a question, how? See, with expenditure in the P&L, your profits will reduce or it will increase? Please tell me. Hello. Hello.
The
Hello.
profit will reduce.
Yeah, if you are showing more expenses in the profit or loss statement, your profits will reduce. If your profits will reduce, okay, you will pay more taxes or less taxes? Less taxes. How?
Less tax.
So suppose if my profits before freight charges is 1 lakh and the tax I am supposed to pay to the government is 30%. So 30% of 1 lakh is how much? 30,000. But I am showing this freight charges in the statement of profit or loss. That means this freight charges will reduce my profits by 10,000. So now my profits will become 90,000 and the tax what I'm supposed to pay on 90,000 is 27,000. So I'm paying 3,000 less tax here, or this is my cash savings, correct? Since it is my cash saving, it is good for my company. I can use more cash in the future. So this is the motive of the accountant to save more and more cash. For that reason, he is showing more and more expenses in the statement of profit or loss through manipulation, which he should not do. Why? Because this is an incorrect treatment. If caught, see, that can be caught in the future. That's a secondary matter. But once he has shown in the statement and the statement has created an impact in the market. Point number 2, vice versa. Let's go ahead. That was related to expensing. Now I will discuss about capitalizing. See, there are certain expenses which in the sense which there are certain expenditure which has to be shown in the P&L account. Rather than that, okay, let's say some example we can take. We can take some example of expensing and capitalizing. Let's say service, let's say repairs and maintenance. See, repairs and maintenance definitely is a recurring nature expense. Okay, or let's say what we can take some other example as okay, so inventory. Okay, so inventory is what? It's a current asset, correct? Because inventory is something which gives us economic benefits in a year. We already have studied that in the ratios chapter. So what did you do is inventory you have purchased from your supplier and you have this inventory you have bought, okay, and you have kept this inventory in your godown. Okay, now when it comes to accounting for this inventory, what is the cost of the inventory you should show? Definitely inventory until and unless sold is nothing but an asset for us. Okay, correct? Suppose I bought 100 boxes and today these 100 boxes are with me. I have not sold 10 boxes, 20 boxes, 50 boxes or 100 boxes to any customer. If I sell any of the boxes, I have to show the revenue for that and I have to show the relevant cost for that. Okay. Okay. If I sell 20 boxes, suppose I bought this 100 boxes at the rate of 10 rupees and my selling price is 12 rupees. So if I sell 20 boxes at the rate of 12 rupees, I have to show how much? 240, correct? And for 20 boxes, my cost is how much? 20 into 10, 200. And my profits would be 40. That is a secondary matter, but I'm not selling it. I'm just keeping it with me. Now, see this inventory which I have bought from my supplier, I have incurred some charges, na? Freight charges. Please tell me yes or no.
Yes.
I have like incurred some freight charges, some duties, all those things I have to add to inventory. This go down rent, go down rent is something which I have to show in the profit or loss statement. Why? See, go down expenses are something which we regularly spend. Why? Why? See, inventory is not coming once now, it is coming many times in a year, correct? So many times in a year we are using the go down on regular basis. So whatever the go down rent we pay on regular basis, correct? We pay on monthly basis. So what I have done is inventory, I have shown inventory value as 100,000 and the go down rent what I did is I added to inventory value. How much? To the extent of 10,000. So my inventory value has become how much? 1,10,000, correct? Do you think this is the right treatment? Do you think go down rent can be added to the inventory cost? Please tell me yes or no. I right now told you go down rent is a recurring nature expense. Something which is of recurring nature should always come in P&L. Something which is of non-recurring nature should come in the balance sheet. That means that expenditure should be added to the asset value and should be shown in the balance sheet. The meaning here is any expenditure which is not of recurring nature or which is non-recurring nature should always be capitalized. Here my meaning of capitalized is that should be added to the asset value and should be shown in the balance sheet. Understood? Understood or not? Please tell me.
Yes, sir.
But some expenditure which are of recurring nature should never be capitalized. That means never be added to the asset value and shown in the balance sheet. Should always be shown in the P&L account or statement of profit or loss. So now actual treatment of go down rent is nothing but this should be shown in the statement of profit or loss. 10,000. but I am adding that to the inventory, which is a very wrong treatment. So because of why I am doing this wrong treatment, if I show less expenses in the statement of profit or loss, that will increase my profits. What will it do? Hello?
Increased profits.
That will increase my profits, and if my profits are high, that would attract the shareholders to invest in my company. So this is the manipulation the accountants do. Understood? That is what I wanted to explain you. All these are points which are very deeper points, should be known. Okay, so the statement should be neutral, free from bias. That means the statement should not be biased. Biased means should not be something which you are making to attract the investors, or should not be something which you are making purposefully to save your taxes. Okay, tax savings can be done, government will help you for saving your taxes, but you should not do any manipulation to do that, kind of that will be called as malpractice. Okay, if you are doing some manipulation and you are trying to show wrongful statements and you want to take any advantage with your wrong deeds, that is not accepted. So the statement should not be something to attract investors or to like save cash for the company and oblige the shareholders. No, whatever the statements you are making, you should make those statements by following the accounting standards thoroughly, and without any manipulation you should show the statement. So that should be neutral. Third point is free from error. That means, see, if you are making a statement and the salaries you have paid $1,008 to your employee, but by mistake you have written this $1,080. so this is nothing but an error, na? Error of what? Commission. Correct or wrong? Error of commission or recording, whatever you want you can write. So you have recorded a wrong figure, isn't it so? So since you have recorded a wrong figure, it will give it what it will do. The profits what you'll be getting would be a faulty profit, correct? Do you think the profit would be right? You will be getting a right profit figure with such kind of errors? No. So whatever the statements you make should be free from error. Now, so let's go for this is done materiality. Yeah. Now, what is materiality? See, what is material and what is immaterial? See, material is something which is very important and which cannot be skipped or ignored. If you skip it or if you ignore it, then that is going to impact the investor's decision with respect to your company. How? See, materiality. Information is material if omitting it or misstating it could influence decisions that the primary users of general purpose financial reports make on basis of those reports. See, suppose this is Mr. A. Mr. A has invested in XYZ company. Since Mr. A has invested in XYZ company, Mr. A definitely wants to know the performance of his investment target, or in the sense he has already invested, it's not a target. He definitely wants to know the financial information or the statements at the end of the year of XYZ company to know the performance of XYZ company in which he is an investor. Correct? Being an investor, he has the right. He has that right. Correct. So what do you mean by materiality now? Information is material. See, the information to Mr. A is material if omitting it or misstating it could influence decisions that the primary users of general purpose financial report make on basis of these reports. That means now any decision whether to continue with XYZ company or to sell the stocks of this XYZ company or discontinue with this XYZ company would depend on XYZ company's financial statements or XYZ company's financial performance. So if any information Okay, if any information which was very important, okay, which was very important and which was supposed to be shown in the statements, okay, has not been shown, due to which XYZ company is, like, the results of XYZ company is in losses because of not showing that, then what would happen? Mr. A would get a wrong information about company's performance, correct? Am I right? Suppose XYZ company's financial statements are like been prepared by the company's accountants, and there is some particular income. Let's say XYZ company has earned some income, and that income has not been shown in the XYZ statements. Because of that, the profits have reduced, or that income was very high income. Suppose XYZ company has invested in many of the investment options. XYZ company has purchased stocks of some companies, or has invested in bonds of some companies. So XYZ company will receive some investment income. Investment income is like it's very high for XYZ company, and that has been skipped. That has not been shown in the statement at all. With this, what will happen? XYZ companies statements are now, whatever the statements now XYZ companies, like whatever the results the Mr. A is seeing from XYZ company statement is nothing but they're showing losses. I'll show you here, just a second. Let's say now this is XYZ company, okay, and this is Mr. A, and he is an investor in this. So revenue is 100,000. Less COGS is, let's say, 60,000. So 40,000 is gross profit. Okay. And operating, administration and selling expenses, let's say 80,000. Now, what is the condition of this company? Isn't it so? Please tell me yes or no.
Yes.
Hello.
Yes.
Why this company is in loss? Because some transaction has been omitted from this. That was very relevant, actually. That was very important. Skipping that or omitting that, now what would be Mr. A's impression about this company? This company is a loss-making company. Do you think do you think really XYZ is a loss-making company? No.
No.
How? Some kind of transaction or some particular information has been omitted from this. How? I'll show you. That means it should not be done, but has been done in that way. So now I will prove you this point. Investment income of $100,000, very high, okay, and then operating, administration and selling expenses 80,000. So 1,40,000 minus 80 is how much? 60. So there's a profit of 60, correct? So was this information material? What was this information, material or not? Please tell me. It was material or immaterial?
Material.
It was very much material. Why? Because this information has become the deciding factor for Mr. A to continue with XYZ company, or to continue holding the stocks of XYZ company. Otherwise, Mr. A would have thought of selling this company stocks, correct, or discontinuing with this company. So certain information are very important. Those should not be omitted or misstated. That's what. If everything was properly shown, then Mr. A would have decided to continue with the company. Since that has been omitted, now Mr. A is in dilemma whether to continue or not. And it is not his fault. Information if not presented, then what would the investor do? He cannot do anything, correct? He definitely depends upon whom? He depends upon the accountants of the company to show proper information, correct? Now, let's see a real world example, materiality. See, listen, very important. See, if a statement of financial position shows non-current assets of $2 million and inventories of $30,000, an error of $20,000 in depreciation calculations might not be regarded as material. Why? Why? Very important, you should try to understand. See, if a statement of financial position shows non-current assets of $2 million, $2 million is a big amount or small amount? Please tell me.
Big amount.
Very, 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 very big amount. See, if I speak about $1,000 and there is some petty expenditure, okay, of 20 cents. Okay, I'm speaking about what? $1,000. That means I have bought some subscription. Okay, I have bought some subscription and the subscription amount happens to be $1,000 and they are charging me a subscription fees of 20 cents. Now I forgot to write this 20 cents in this way, $1,000 and 20 cents. Do you think this 20 cents matter? Do you think it matters? If I write this 20 cents or I don't write this 20 cents, do you think it matters for me? Or do you think I'm going to decide to take the subscription based upon this 20 cents? Do you think it matters?
It doesn't, sir.
It doesn't matter for me. 20 cents is something which we just people give to beggars. Sorry to say, very small amount, very small amount. This 20 cents is not the deciding factor for me to take a subscription or not. It's a petty amount. We really don't care about this. So it is immaterial. So in the same way, if I show the non-current assets to the tune of $2 million, very high amount, and like I make some error in depreciation calculation and some error has come up to $20,000. That means I forgot to record some $20,000 or I forgot to reduce $20,000 from this 2 million. Do you think it matters? See, 20,000 is like same thing here. It's like 20 cents for $1,000. $20,000 for $2 million is very similar to 20 cents for $1,000. It's a very petty amount. It doesn't matter. It doesn't bring a very, it doesn't impact that much to the investors, correct? If such kind of small amounts are like not recorded or some small errors are made, it doesn't matter for them. See, what is 2 million and what is 20,000? Nuts. Now, next point. Please tell me, all of you in chorus, did you understand? And I was able to convince you regarding this example. Please tell me yes or no.
Yes, sir.
Yes, sir.
Amsika is saying yes. What about Hur and what about Fatima?
Yes, sir.
Yeah. So it doesn't matter if you don't show, if you really forget or you make some error of not recording or not deducting. See, depreciation is generally deducted from the assets value. So this petty amount doesn't matter. If I take $200, you say this is what? It's even useless. Okay. We don't care for this when we speak about 2 millions now. But we also had a discussion regarding inventories. Now, please understand. That is what is materiality all about. Materiality is nothing but whether it is very much material for you or not. That means to $20,000 is not a deciding factor for you to really understand the change in the asset value here. Okay, depreciation has been done for this asset, but only some 20,000 has not been deducted. It doesn't matter. Okay, 20 cents. See, if I write some expenses, salaries, $1,000. Audit fees which we pay to the auditors, $2,000. Rent what we pay, $10,000. Some stationary items also we use, $5. Do you think it matters? Do you think in this thousands this $5 just a single digit figure matters? Tell me yes or no.
No.
It doesn't.
See, when I will be kind of finding out my profit or loss of my company, $5 doesn't make a difference at all in this thousands. It's useless. Who cares for this? So my decision to continue with the company or to discontinue with the company doesn't matter on this $5. I won't take decisions on this $5. Okay, it's useless for me now. But in this example, Inventory is having a value of 30,000. So however, an error of $20,000 in the inventory valuation, that means inventory you are showing 30,000 and there's an error of 20,000 in that. Actually, you should show inventory as 10,000, but you are showing as 30,000. Or inventory is of 30,000, you are showing 10,000, let's say. It matters or not? Of course it matters. $20,000 is not a small amount. Please tell me yes or no. Yes. Now, second one, who is going to explain me? Hamsika is going to explain me. Hamsika, explain me this one.
Yes, sir. 1 second, sir. I'm reading it.
Yeah. Take your time. Okay, we'll discuss. If a business has a bank loan of 50,000 and 55,000 balance in bank deposit account. See, the loan is 50,000 and the amount in the account is $55,000. It will be a material misstatement if these two amounts are netted off on the statement of financial position as cash at bank 5,000. In other words, incorrect presentation may amount to material misstatement even if there is no monetary error. See, what do they mean to say is, bank has a loan of 50. I'll put it in negative balance. And I have a bank balance of 55,000. It will be material misstatement. Yes, it is a, see, actually, no one should net off these amounts. That is a wrong treatment. And it matters even, okay, because this is a liability. This has to be paid in the future, not immediately. And this is what I have immediate cash in my account. Do you think if I net this, what is the net amount of this? 55,000 I have cash and 50,000 I have liability. Liability can be settled after 1 year, 2 years or whatever. If I show 5,000 as net amount in my balance sheet, definitely it is going to have a bigger impact on my decision making, because if this 5,000 is shown in my bank account, okay, what does it mean? It means that I have very less amount in my bank account, whereby I had how much? 55,000, correct or no? Yes.
Yes, sir.
If the investors see 55,000 amount, they'll be more confident. They will feel more confident in the company rather than seeing 5,000, correct? And do you think it is justified that this liability of 50,000 is not shown in the books? It is totally unjustified. It's a wrong treatment, completely wrong treatment. Doesn't it really matters for us? It's material, because such kind of, it's material to show this separately and this separately and should not be netted off. It's a wrong treatment and it should not be done. Okay, it's incorrect presentation. Okay, so investor's decision definitely would change. Investor's decision would definitely be impacted if only 5,000 cash is shown in his bank account by netting of this amount, because it really matters for them. What matters for them? Cash. You are just removing 50,000 cash away from their bank account. It is very relevant for them. If a company is having 50,000 cash, the investor will be feeling more confident rather than 5,000 cash. So this is very much material for his decision making. Did you understand?
Yes, sir.
Who did you understand? Fatima, did you understand?
Yes, sir.
55,000 matters, not 5,000. If they net it like that, first of all, it's a wrong treatment, and 5,000 cash is a very petty amount when compared to 55,000. You cannot remove that 50,000, 55,000 like that by netting. It's a wrong treatment, and cash is metal for us always. It matters. Okay. You will never invest in a company which is having small petty cash. You'll always invest in a company which is having good amount of cash with them. Now, Faithful presentation, I already told you, free from error. It should be complete, neutral, free from error. There should be no errors. Okay, this is what we already discussed. Yeah, next point is substance over form. See, the substance is more important than legal form. How will I prove you this? I'll prove you this with a good example. Just follow me. Okay, I understand this chapter has taken good amount of time, but if every chapter we are doing with good basics, coming chapters would become very easy for you. See, substance over form. What do you mean by substance over form? Substance is more important than the legal form. Okay, sometimes substance would be given much more emphasis or importance than the legal form. Now this statement looks vague statement to you because you're not able to understand what is this all about. So please try to understand. First of all, you understand what is the definition of an asset. Asset, it is some resource which is owned by the shareholders who are the actual owners of the business, controlled by the entity. Entity here means the company, and on which future probable economic benefits flow into the entity, and via entity is enjoyed by the shareholders. Now, I've written a lengthy definition of asset. Let's say this is Mr. A. So Mr. A wants to start a business, and what he understands is, to start a business, he wants a premise. There are two options he has, either to purchase, that is either to buy or to lease. Okay. So if Mr. A thinks of buying, it's very tough. You know, commercial properties are very costly. If you want to buy some commercial property for setting up a shop on some main road, if you construct that, it is a 10 lakh rupees thing. But if you want to buy it, you have to spend crores and crores. That is what we humans have made things. So he doesn't want, if he buys, let's say if he buys the asset, okay, please try to understand now. If Mr. A really buys the asset, so now can he show that asset in his books as his own asset? Please tell me yes or no. That means if Mr. A buys a building, can he show that building in his books as his asset? Tell me yes or no.
Yes, sir.
Yes. Why? Because if Mr. A buys a building, that building is some resource which is owned by Mr. A, controlled by Mr. A, and on which future economic benefits would also be enjoyed by Mr. A. So definitely it's an asset for Mr. A. But I rule out this one and I opt for this. If Mr. A takes this property from Mr. B on lease, and that lease is capital lease or finance lease. Now, these two things are different things. You don't have leasing topic at all in your books. You'll be learning in F7 book. Lease is nothing but, lease. What is lease? You take a property by paying some like you pay some monthly amount to that lesser. We say lesser. So lease is a agreement between two parties. One party is called lesser. In this, Mr. B is lesser. and one party is lessee, that is Mr. A. So Mr. A wants to take property from Mr. B as Mr. B, and Mr. A is lessee and Mr. B is lesser. Okay. Mr. A would take property on lease from Mr. B by making some monthly payments, some fixed monthly payments. Okay. You just keep that much knowledge because this is not there for you. So now my question to you is, can Mr. A show this leased property in his books as asset? Please tell me. I want answers from everyone. Mr. A has taken property from Mr. B on lease. Can Mr. A show this leased property in his books as assets? Please tell me yes or no.
No, sir.
Sorry?
Sir, no.
Hello, yes. Yes. See, why are you like, no one is going to tell anything. Just give me an answer by thinking.
Sir,
I
it's
want
not
answer. Yeah. Tell,
it's
please.
not his asset.
Not his asset. Okay. So Hamsika says no. What about Fatima and what about Hur? I want an answer. I don't keep quiet.
I don't think, sir, it's an asset.
Yeah. So yeah, please tell me with name. Name, please. The
This
voices are very similar.
Sir, this is Fatima.
Fatima, you say yes or no?
No.
No. And what about Hur?
No, sir.
No. So all you people have said no, but I will say yes. Why? That is the concept which I want to explain you. Substance over form. Here, now please carefully understand. This leased asset is owned by whom? See, this leased asset is owned by whom? Owner. Who is the owner? Mr. B, correct? Hello?
Yes, sir.
Mr. B is the owner, na? I don't deny this fact. Mr. B is the owner. But now this property is given to whom? From B, who is the owner, the property is given to whom? A. Now the property is in whose control? It is in whose control?
It's under A's control.
A's control. And who is going to enjoy the, who is going to make the economic benefits from this asset?
A.
So how now you will say how he is going to make economic benefits? I don't understand. This is your question. See, B is going to take a lease rental of 30,000 per month, let's say. But A is going to generate a revenue of 5 to 10 lakhs from that property. Okay. If I remove all the expenses, A is going to make 3 lakhs per month. Then who is making the benefits from that asset?
A's.
So what should be given more importance, the legal form or substance? Of course, the substance. I understand. Legally, B is the owner. I understand. Legally, B is the owner. But here, the economic benefits are really enjoyed by Mr. A. The asset is owned by B. I won't deny this fact. But it is controlled by A now, and the economic benefits from this asset are also enjoyed by A now. So A can also be said as what? As someone who is controlling this asset, and A can show this asset in his books as leased asset. What he can show? Leased asset. So what he will do is, suppose this is a T-shaped balance sheet. He will show leased asset. Okay, let's say that is how much? Suppose let's say the asset is of 10 lakh rupees, and he will also show a lease liability of 10 lakhs. Understood? Yes or no?
Yes, sir.
For him, two things. First thing is he is controlling the asset, he is making economic benefits from that. So he will show this asset he will show this leased asset as his asset in the asset side of balance sheet. That means he can show that leased asset in the asset side of balance sheet in his books. And the asset value is 10 lakhs. Every year this asset will be depreciated. One day this will become zero almost. And since he is supposed to make the lease payments, that means he has taken the property on lease. Every year he has to make some payments. So every year, suppose let's say for 10 years he is going to make payments to, the lease term is 10 years and the lease payments are 1 lakh per year. Okay, so after 10 years the liability will be zero. Okay, then these two things will not be shown in his books. Finished. Okay, and one more thing, B is also the owner and B can show this asset in his books as his own assets. Don't worry, we are not speaking about B. We are not concerned with B, we are concerned with A, because here we are speaking from A's perspective. He has taken the property on lease. Okay, now this chapter is not a small chapter, it's a lengthy chapter. So like you don't have that in your syllabus, so I'm not going in details, leave that. So substance over form is done. And sale with the right of return and consignment arrangements. What is this? See, sale with the right of return, where an entity makes a sale to customer, there is an expectation that the customer may return the items to entity. Okay, the entity does not recognize revenue from sale until it is virtually certain that customer will keep the goods and therefore a genuine sale has occurred. So what is this? See, there is XYZ company which is manufacturing some chocolates, and this they are manufacturing for the first time. That means they're a new company and they found some wholesaler whose name is ABC, and they asked ABC to sell these chocolates on sale or return basis. That means they said that, see, we are not pressurizing you. We know that our chocolate is a new product in the market and we have stiff competition, and we know that you are also not interested, but you see, you try to sell this. If you can sell, that's okay, you make revenue. If you don't sell, you return the goods back to us. What it doesn't matter, na? ABC is like, what ABC is like, doesn't have any problem with that. What he says, okay, I will try to sell your goods. If I can sell, I'll generate revenue, I'll make profits. Okay, and definitely then whatever the goods, like I'll return your money back to you. That means, see, suppose let's say 1 lakh rupees worth of goods has been sent to ABC by XYZ. ABC is not asking the payment immediately. 10,000 worth of goods has been sold by ABC. Now ABC will make the payments for those goods to XYZ, and ABC will enjoy their profits, and XYZ, when they get their money for these 10,000 worth of goods, they'll get their profits. Correct? See, this is manufacturer, this is wholesaler. So manufacturer makes profits from wholesaler, wholesaler makes profits from retailer. Everyone knows that. So this is what does it mean? So we will come from here. Substance over form. This is a characteristic of faithful representation. Under substance over form, the commercial reality of transactions is reflected in the financial statements, and this takes precedent over the legal form of arrangement. I gave you the example of lease. In that, the commercial reality of transactions, that means the leased asset is giving economic benefits to Mr. A. So hence he can show that in the asset side. Okay, rather than thinking that this asset belongs to B, who is the actual owner. No, it doesn't matter. Who is making economic benefits? A. So A can definitely show them in the books as his asset. Okay, but leased asset. Now, this can be seen in the accounting treatment set out in IFRS 15. So this IFRS 15 revenue from contract with customers is a chapter of F7 book, which you will be learning afterwards. So what does it mean? Sale with the right of return. So where an entity makes a sale to customer. So XYZ has made some sale to ABC, and there is an expectation that the customer may return the items to entity. So ABC may return the items to XYZ if it is not sold. Okay. The entity does not recognize revenue from sale until it is virtually certain that customer will keep the goods. That means XYZ will definitely record the sales in their books if ABC definitely makes the payment to them for the goods what ABC has sold. Until that, XYZ will never show the revenue in their books. Did you understand what I'm saying?
Yes, sir.
this 1 lakh rupees worth of chocolates has been sent to ABC by XYZ. ABC was only successful in selling 10,000 rupees worth of chocolates to customers. Okay, for which whatever the payment ABC was required to make to XYZ, ABC made it. So now XYZ now can recognize the revenue to tune of $10,000, correct? Rest of the $90,000 they cannot show us revenue. Why? Because they are not confirmed that it is a sale for them until and unless ABC sells them to retailers in the market. Did you understand this? Hoor and Fatima? Hello.
Yes, sir.
Yeah, Hoor and Fatima, did you understand?
Yes, sir. This is Fatima.
Yeah, okay. Now,
Yes, sir.
I really expect that you are getting these points. Consignment arrangement. What is consignment arrangement? See, there is a consigner. So this consigner is someone who is some manufacturer, and he has appointed some XYZ in some city to sell his goods. That XYZ would be termed as consignee in this arrangement. Consigner is the he is the, let's say, he sends the goods to consignee, not sells. Please understand, this is not selling. This is called sending. So consigner sends the goods to consignee. Consignee has to sell the goods to people in the market. So consigner sends the goods, consignee sells it, and the arrangement is consignee can deduct their commission from the sales value. Suppose consigner has sent the goods to consignee of $10,000. Instruction is to sell this to the people in the market for that amount. Whatever you get the revenue, you deduct your 10% commission. So $1,000 will be deducted by consignee and 9,000 will be sent to consigner. Okay. So when the goods are transferred to a customer and yet the customer does not obtain control of the product at delivery date, the goods remain in the books of entity and revenue is not recognized until the control passes to consumer. That means consigner has sent the goods worth $10,000 to consignee, but consigner cannot record this 10,000 as sales in their books until and unless this 10,000 worth of goods are sold by their agent to the real customers. Okay, consigner send goods to their agent consignee. Consignee is supposed to sell customers. So consigner sent goods of 10,000 to consignee, consignee received it. But consigner can show the revenue in their books for this $10,000 only if consignee is successful in selling this 10,000 worth of goods to customers. If consignee is not able to sell the goods to customers, consigner cannot show them as sales in his books. Correct? Did you understand?
Yes,
Hello?
sir.
Yeah. So we will continue from here tomorrow. Tomorrow we will wind up this chapter. I think just two or three pages left over. 1 or 2 pages almost. Elements of financial statements is like, it's not a big thing. So we will sit for half an hour and we'll wind up this. Immediately we'll jump to next chapter. Next chapter is source, records and books of prime entry. So we'll see the status. Chapter number 1 is done. Chapter number 2 is done. This we will wind up tomorrow. This one also will start. It will take 1 day. Chapter number 5 is done. So this 5 chapters once done, you have to write test. Secondly, we have already finished this interpretations of financial statements. So 6 chapters done. Okay. Then we can go for trial balance, inventory, small chapters. Till here, I will wind up first. My prime aim is to finish this in some 1 week like that, 9 chapters, like 10 chapters. I want a target in this coming 1 week. Okay. So no worries. If I come tomorrow early to home, I'll start at 7:30 only. We'll take lengthy sessions and we'll try to finish this source, records and books of prime entry by tomorrow. So that 5 chapters would be done. I'll conduct a test on this 5. Okay. Thank you.
Thank you, sir.
Thank you. Please go to this once again. Thank you.